Without using a trading log to log your trading activity, you're going to have no clue if your trading strategy has a chance of working over the long. Really, how could you? You need data to back up the probability trading strategy. And a trading log is really the best place to start. And I think a trading log is an underutilized but a pretty valuable tool that's available to any trader. And you have to ask, why is it that traders have a hard time using it? And I think part of the reason why so many people overlook it is they don't have or they can't stick to a proper trading plan. And if that's your problem, then you really need to be journaling. If you're able to execute your plan properly, reasonable discretionary limits, then to get to grips with it and be able to build upon it, you must take the time to assess, plan, and log your trades appropriately. But my trading platform has a trade log. Well, maybe it does. And perhaps it even has the stats that you need to assess your plan. But what if it doesn't? What if it doesn't know that you took a setup on an attempted gap fill last Tuesday? What if it can't account for the fact that you think perhaps your strategy works really well after the release of the NFP, which is the non-farm payroll? You might have thousands of entries in your trading log, but unless you plan what you want to look at, the log's going to be limited in value, although it's still better than nothing. And if you take the time to address what you hope to gain from your trade and how you record your trade, you're going to reap the rewards and agree that your trading plan is probably your best friend. Well, perhaps not your really best, but your risk plan is probably that. And your strategy and your psychological approach can be also thrown into that mix. Now, if you struggle to stick to your plan, then it's really important to make use of your trade journal and possibly reassess your trade plan. Understanding the importance of a trade log can give you the extra commitment and impetus needed to stick to the trade plan itself. And this is before you've even started looking at your stats. So you got something to aim for. And so your consistency of execution goes up a level. Why? Because it has to. If you don't sort out your execution, what good are the stats from your trade log going to be to you other than improving how you don't follow your plan? But don't think you're going to automatically become immune to making mistakes all of a sudden just because you start following your plan properly and logging your trade. A trade log can highlight the number of mistakes you're making and therefore it can keep you on your toes. If you're aware of how likely you are to make a trading mistake without putting all your focus on it, you'd be better placed to rein yourself in when you need to. And here's where the trade log really shines. It tells you where your plan can be improved upon. Of course, it doesn't really tell you anything. It's just historical stats. And this distinction's really important to make. The interpretation of those stats, when you put them into the context of how a market trades, the possible implication on occurrences of similar instances of an event in the future, and the way you trade your trade plan is what will potentially be invaluable to you. Now, you could, of course, end up making inappropriate changes to an otherwise really solid trade plan, for example, if your interpretation's not good. So there is a degree of skill in using the information that you gather, but like with anything, you should be testing any changes that you make anyway. So by seeing how the trade plan works, you're not only able to improve its level of performance, but also gain a deeper understanding of how the market you're looking at trade. This will potentially give you an insight into specific variables to focus your attention on in order to tune your plan and whether other types of strategies could work on the market. So we've already talked about a few things, but there are so many different possible variables. In fact, you could argue that the number of variables we choose to look at, it's pretty limitless. How much volume has traded at the open? What was the size of the range for the previous session? Does a specific economic release change the odds of success for your strategy on that day? Is there a specific time window or a day where your plan works better or worse? Do you perform better after a long workout before the session starts? And are you able to generate more consistent results when you only have to concentrate for a short amount of time? And does the strategy perform better when the market you're trading is trending or balancing? See my point? If you're going to be able to analyze any aspect of your trade, you're going to need to plan ahead for it. And there are some things your platform may give you anyhow, but anything which is non-standard or subjective must be logged at the time so that enough data can be gathered to properly study it. And so many times I thought of something only to realize that, nope, you can't study that idea too easily. But when this happens, I add it to my trade log so I'll be able to figure it out at some point in the future. And sometimes information's useful. Many times it's not. But until you decide to track a variable and then subsequently test it, how are you ever going to know? Now, you don't need to have a fully in-depth journal when you're just starting. Even a basic listing of your trades, real and simulated for backtesting purposes, can help you stay on point. The day, the date, time trade was taken, time trade closed, entry, exit price, stop loss price, position size, profit and loss. This information can be taken from your broker software, but you'll have a better chance of reviewing it if you make a list for yourself. What if you want something more in depth? Well, there are many sites that offer trading journals for costs. And there are 3 that you may want to investigate, although I have no experience with any of these. 1 is Edgework, 2 is Trading Diary Pro, and 3 is Trading Consistent. One very popular free trade journal is My FX Books for FX traders. And now Netpicks, we know how important stats are for traders. So we put together something we call the Ultimate Trade Analyzer that you can use and have as a gift to you. But just like your trading journal has to become one of the rules that you follow. And every trading trading day by logging all the information on the spreadsheet. And if you have our software, just let it calculate the important information. You may find that by logging all your trades, you can improve your trading plan to reap even bigger profits or even lower your risk. Either way, you're going to find a trading log is pretty invaluable, and here's a link that you can download.